This is a recording of today's live stream. In today's live stream, we answered questions many traders and investors have. The first question is, what happened with Bitcoin and are we in a bear market? And the second question is, how can I navigate this market given the situation of the market? If you missed today's live stream, here it is. All you need to do right now is sit back and relax and enjoy the live stream. So first of all, when you do analysis for any coin, you look at the high time frame. The high time frame, I mean the monthly, weekly, and daily. What has Bitcoin done? So without using any fancy indicators such as the RSI, the MACD, the moving average and all that, keep everything aside, just look at the chart. Let me remove this as well. So let's just look at this chart. What do we see? We see Bitcoin consolidating for quite a while, had a tiny minuscule pump and dump here. Then it also went sideways for quite a while, pump, dumped, pump, dumped, pump, dumped, and pump, and hopefully dumping. But hopefully not as well because we want higher prices. So this is on a very high time frame. This is what Bitcoin has done on the monthly time frame. Then we look at it at the weekly time frame and you see what Bitcoin is doing here. There's something called market structure. I'm going to talk into details about this in a video, the coming video, but I'm going to tell you shortly what market structure is. Market structure is basically looking what's the structure of the market in terms of doing higher highs, higher lows, lower highs, lower lows. In this case, we have this one low, this one high. We made a higher low, higher than this, meaning it's called a higher low, and then we made a higher high. And now we're at a higher low, but it's not confirmed yet. It only gets confirmed when, let me draw it for you, when we pass to this level over here. Then we can say this was a higher low, and now we're heading for a higher high. Otherwise, right now, it's not confirmed. It can do this and go back and make a lower low. Yes, a lower low. So if it makes a lower low, that means we might have, it might be an indication that we might might be going for a downtrend. So this is initially what I do at the beginning of any analysis. You look at the monthly time frame, you look at the market structure in terms of higher lows, then you look at the weekly time frame in terms of market structure, and then finally at the daily time frame, where are we now? So I'm not going to go all the way back here. Just briefly telling you that Bitcoin consolidated, then at some point it pumped super hard, non-stop. And then it consolidated, made the high here. Everyone was very happy. Like, remember what people were doing at this point. At 64, 65K, people are happy. Like, Bitcoin went from 300, 100, or whenever they entered to $60,000, $65,000. This is super insane. Then we had this dump. And people called it because of the Elon Musk dump. Elon Musk tweeted things about Bitcoin and it's not environmental friendly and blah, blah, blah. But that's all fundamentals in my opinion, because we had these levels over here from a really long time. If you pull the Fibonacci extensions from this level, you can find the level exactly over here. So that's in terms of technicals. That's why I look at technicals. So we had this dump over here. We consolidated for quite a while. Bitcoin, basically, people were thinking, okay, where Bitcoin should go in this region over here. Then suddenly we made 1 low, 2 low, 3 low, 4 lows, and then we started pumping, right? And what's the market structure here, as I explained, is that we had a low, we made a high, we made a higher low, higher high, and now we're at this point. We don't know if it's a higher low or it's going to be a lower low. So that's why I'm saying we need to wait for more data to understand exactly what's happening at the high time frame. So now let's go into a more shorter time frame. See how I started here. I just want you to be aware of this when you do your analysis. You start from the high time frame, you see what has happened, what's happening, where are we? And then you come to a lower time frame and see what exactly happened the past month or two. So what happened here? We made one high. People were saying, wow, we broke this high. We broke this high of March, April. And then Bitcoin would fly. Then we had this minor dump. Then we broke another high, the previous high. As you notice, it's a similar pattern of what you see here. 1 high, 2 high, 3 high. So we broke this high as well. And then we dumped. So now let's go into this time frame. See how I'm doing this? I didn't use any indicators yet, didn't use any technical analysis tools, Nothing. I'm just looking what the market has done and to decide whether this would be a good investment or not. And I'm going to put you in the scenario or in the shoes of the big investors, those who have millions of dollars. What are they thinking at this point in terms of Bitcoin as an investment or getting into Bitcoin? So we made this high over here, right? Then we had this huge dump. I was mentioning that I sold a large portion of my... I was mentioning that I sold a large portion of my Bitcoin over here. Why? Because we breached all-time high. When we breach all-time high, price basically goes into discovery mode. The market goes into this price discovery mode, and it wants to discover new prices. What's the real value of this asset, underlying asset, which in this case is Bitcoin. So it tested once, I sold. It tested it twice, the all-time high. I sold more. Then we had this huge dump. What happened in this huge dump? What happened here? So let's look at market psychology. I said I'm going to look at technicals and market psychology, right? So let's start with market psychology. What was the psychology of the people in the market and who is left in the market right now? So we need to understand this to know what's going to happen and how could we navigate this market. So typically, people over here would either buy or sell. And as I remember, the market sentiment, depending on crypto Twitter, and people talking around me and everybody, basically the influencers and so on, and what people were actually doing in the order books. If you look at this, what actually people were doing in terms of buys and sells, people were majorly buying here at this point. So if a lot of people are buying at all-time high into resistance, this is a big sign for me. So the majority bought here. Let me draw. The majority, as I saw, bought here. And there were smart investors who sold here, who put a short order, let's say, in terms of trading. They sold. And what happened is price dumped, right? So those who sold are in profit right now. They have a lot of money. And they most probably took their profits because this is what a 30% drop, 30 to 40% drop. And that's a lot of money if you are playing with big money. And those who bought either got their stop losses hit at these points or either got liquidated at these lows. So who's left in the market right now? The question is, who's left inside the market? Who's actually moving this market? The retail. Because the volume, we should expect the volume to be really low because these people who got shook off and lost a lot of money are on the side. There's like, okay, I'm gonna wait now. They're in extreme fear. They said I lost a lot of money. What should I do? I'm just gonna wait to see what the market does. And those who actually made money took their profit. They said, I'm gonna go enjoy my profits. This is too much of a good opportunity to keep it and risk it for this move, for example, going up. So that's the market psychology right now, and that's explained the reason why the volume is low. Because as per textbooks, so you're going to go read any book about trading, they're going to tell you, okay, if the move happens on low volume, it's a weak move, it's not supported move, and blah, blah, blah. But if we look at context in this case, they don't tell you about context. You need to look at context. For example, this move up here was purely this move up here was purely on low volume. This move up here, but we had a how many percentage move? 134% move, approximately. So why was it on low volume? Look at context. It was on low volume because people were scared. People were waiting to enter. They saw this. People were waiting to enter. They're saying, okay, I want an entry. They wait, then the train passes, they still wait. We're at all-time high, they enter, they get wrecked, and now they're just waiting. So this happened in low volume, yes, but the context is people were shook out, people are waiting to enter, people either lost their money and don't have money to come back in, or are just waiting for a good opportunity which they don't know where it is. So that's in terms of market psychology. And if you're a big trader and have a lot of money, and you for example, you have a lot of real estate, you have a lot of gold, commodities, let's say, and you have businesses and stuff like that, and you have basically have a lot of money, and you want to enter something called Bitcoin, the cryptocurrency market. If you look at it this way, if you look at it from, let's say, a monthly time frame, you see that last year on November it was here, somewhere here, 13,000, and now we're at 67,000. So as a big investor or someone has a lot of money, would I be entering now and would I be buying Bitcoin now at 46,000, 47,000 or 50,000? Logically and theoretically, no. Because as an investor, I have a different criteria. I'm going to hold this for a really long time as an investor, those who have a lot of money. I'm not going to enter today and leave next month. No, I'm going to enter for a really long time. So I look for the dips, for the real dips, not this kind of dips. So that means big investor, big people who have big money are still not entering the market, one. And then you might ask, why is the market moving? At this let's look at the 1 hour time frame. Why is the market moving? Why do we have this range going up and down, up and down, up and down? It's consolidating, yes, but why it's moving? This is purely based on retail. This movement, what's happening right now is retail moving the market. The retail investors, those individuals who usually buy at the highs and lose money, and they sell at lows and lose money. So this is what's happening right here. Until some good smart traders come in and with big money and start to move the market. So that's in terms of psychology. Is it that clear in terms of psychology before we enter to the technicals?
Yes, it's clear.
Okay, perfect. So if that's clear, let's move into the technicals right now. And then I'm going to take questions at the end. So technicals. Let's go to the other chart. And now for the Bitcoin shots. You know who says that. Anyways, now for the technicals. I start from the monthly time frame again, from the high time frame. I look at the main levels in terms of high time frame levels. These are, again, simple levels that are beautifully respected, and I'm going to show you how. For example, how I'm going to draw these levels, I'm going to go into details about this later because I take practical notes and I have certain criteria of setting these levels. This would be 1 monthly level I would set. Another one would be here. This I wouldn't set because it's already one touched and went through. This I would set, it's too low, but when you do your analysis, you should be really unbiased. And like that, I start from monthly, I go to the weekly, I go to the daily. I end up with these levels. Monthly, weekly, and daily levels. So as you can see how they're beautifully respected is we had this price go down, we hit this weekly level, we had support and resistance at the daily level, the monthly level went straight through because this was an old one. And we had some respect on the daily level here. And we hit exactly the daily level at 41,000. So this in terms of technicals where our current support and resistances are. So the highly time frame levels, and at this stage over here, how would I enter? There was a really nice trade that I took as well. I'm going to show you where it is. Something called the naked point of controls. You see this, the daily naked point of control gave me a beautiful long. These point of controls are basically something that I'm going to keep in the simple terms. It's a line that actually it acts like a magnet. It pulls the pulls price towards those lines. I have one here and one here. These are weeklies. We have monthlies and dailies. So these lines actually pull price. Like price should touch them and move. So they're called naked point of controls because they're not touched yet. And I get them from this graph over here. I'm going to go into this in a while. So these are the daily naked point of controls I plotted. And then we have these volume lines, which are very important lines as well in terms of support and resistances. And then we have these single prints. Single prints are basically inefficiencies. Inefficiencies in the market, meaning that if price, this line over here acts as support if it's above it, and here would be support as well. So if we go here, we might expect a bounce. And if we might expect a bounce, but if we get acceptance in here and retest it, this move would be really fast, like the one we had over here. It went in, it got rejected, Then it got accepted. Then it had a really fast move to the upper side. Yeah. Okay, so it had a really fast move to the upper side. So this is what single prints are for, and we have a big one over here. So what I'm trying to say here is for Bitcoin at a low time frame, if we're consolidating here, right? But if we get acceptance into this region, expect this move to be really fast. And if we have a fast move, what would stop it? Taking the liquidity of this low or the liquidity of this low. So keep that in mind. If we breach this level, which is 45111, around 45111, and find acceptance there, expect this move to be really fast with a kind of support, the naked session point of control here. But this is going to be a really fast move, and it would be worth a trade. If you're going to trade this, find acceptance, take profit at this level, set your stop loss to 0, and target this level and close your position here. So that would be a trade, a nice trade. If you want to take a trade, that would be a nice trade setup. So that's in terms of these single prints, inefficiencies, let's call them. And also, this is very important, the uptrend of Bitcoin. If this is lost, we're going to be in a bear market, definitely, because this is very important levels. We should not lose these levels. As you can see, these trend lines, we're really close to it. Also, this would be confluence. Confluence, I mean, something that builds the case that this Bitcoin price would go up is that we have this level over here, then we have the single print level over here, then we have the daily level over here, we have a daily level over here, then we have the naked session point of control over here, then we have some speed fans over here. So if you see this box over here, it's a really strong box. And typically, if we reach this region, at least we should expect a bounce. If we're not going to completely reverse the trend to go up, at least expect a bounce. And for that bounce, we can trade it and get some money out of it until we go lower with managing our risk in terms of putting our stop losses and taking profits on the way. So this is why I add these confluences and I add different tools just to know where should I expect a bounce. And something really nice I found is this pitchfork. I'm going to share it with you for those who want to trade it. It's a really nice trade. You can really nicely trade this range right now with this pitchfork. Look at this pitchfork. Let me pull it for you just for those who want to pull it. Go to the pitchfork tool. Take this high. Take this low. Take this high. I'm going to fix it right now. Yeah, look at this range. Look how beautifully it's respected. Low, take profits. High, sell here. You buy here, take profits. Sell here, take profits. Buy here, take profits. Maybe sell. You keep on trading this until it breaks out. Your final trade would be a loss, but you made a lot of money on the way. So this is one of the money machines right now that's working. So keep in mind this pitchfork. So on the macro time frame, what do I expect? Are we in a bear market? Not enough data. People are asking, this is a big question. Let me answer the big questions. Are we in a bear market? We don't have enough data to say that. And because there's lots of liquidity right here that we should take. If this happens and nothing reacts here because we had this big levels of confluence from the technicals, no reaction, it goes straight through, then forget it. I mean, it's going to go down. But if we have a reaction here, this is basically, I'm saying this is the critical point for Bitcoin right now. Then we have more technicals and more analysis to do to understand what's next. But right now I'm watching this level, and in terms of shorts, if you want to take a short because we want to look at both scenarios, I'm watching this level. Yeah, here. The 57K region, very important. 57, 58K, very important. This region, if Bitcoin wants to show that it has strength right now, we should claim this region. So right now, Bitcoin's ranging. It's had this dump. We had this market cycle. Do you understand Bitcoin? Where did Bitcoin come from? Where Bitcoin is headed to? And finally, I want to show you this over here. Let me show you something. We have single prints here. No, I don't want to use those terms. Let me use inefficiencies, possibilities of price to move very quickly here. And we have it over here, we have it over here. So there are many inefficiencies. Let me just zoom out. You can see many inefficiencies in the market, okay? And something else, no, not this. This website is a bit laggy, but let's just wait. Anyways, what I want to show you here is that there's no volume. Let's just go here. I don't know what happened. Anyways, what I want to show you is that there's no volume, yes, and there's no the open interest is decreasing, yes. Yeah, okay. There's no volume. The open interest is decreasing on this drop over here. Yes, see, we have open interest, and this delta is increasing. Just forget these terms. I'm gonna explain them into details later, but these terms just basically show the health of the move. So these are all decreasing, yes, but looking at context and market psychology and not looking at textbook theory, it's because people got wrecked and people don't have money right now, and those who made money actually are in profits and took their profits. So that's why there's no volume. So expect a volume like suddenly to come in at some point. Yeah, that's finally what I want to share. So I hope this is clear, and if anyone wants to ask any questions, I'm here to answer. Any questions you have, let me know. No questions?
I got a question here, Samlik.
Yes.
So these NPOCs, uptrend trend lines, these folders, like, are they public things, or you've created this in your account?
No. The NPOCs are basically these.
Yeah, but to find them like on
I'm going to show you how I plot them right now. Let's just load, because the point of control. What is point of control? Point of control is basically the level where most transactions took place, where most buyers and sellers came and were fighting on the price. So each session, let's say this is the monthly, each month, there's a certain level where the most volume took place in terms of buyers and sellers. So this is this month level, the point of control. But is it naked? No, it's not naked. These are all not naked. This is a naked point of control over here. There's something wrong with this program, but you understand what I mean, yeah? Because that point down there is basically showing you there's a straight line that has not been touched, and most volume in terms of buyers and sellers took place. So that's a naked point of control, and when that level is revisited by price, by Bitcoin, by any other coin, it definitely would, the buyers and sellers would come back in and fight on the price. That would move either price up or down very quickly. So that's where I wait and be prepared. Those levels be reached, and I buy or sell. So, but I get it straight from this program over here. Yeah, here. See this level? It was on this month in July, and still most volume transacted over here in terms of buyers and sellers, but it hasn't been touched yet. That's a naked monthly point of control. And I expect it to have some kind of reaction when price comes here. And that's what's happened like a couple of hours ago in terms of daily point of control. Let me show you. Yeah, here. See this level over here? This basically is the daily point of control for each day, for each single day. And this was a naked point of control, naked daily point of control. And once it was touched, there was a huge reaction on it, which was a 3% move up. 3-4% move up. So that's a nice percentage. If you just take this trade, you're done for the day.
Yeah, very nice.
Any other
you can find it on this Oxy chart,
yes.
TradingView.
Yes. TradingView is 2D. For me, TradingView is 2D. Like If you trade on trading view only, you're trading blindly because you have a candle. Okay, candle went up, one candle went down, so what? You just have the open, close, high and low. But here you actually know what's happening behind the scenes, like
Orders and stuff. Yeah.
yeah, you see how many sells, how many buys at each level, and what's happening exactly at each level. That's very important. Yeah. So any other questions?
Hello.
Hello, yes.
Hi.
Hi.
So I just want to know that, so are you, because first time I see again, definitely more you were doing technical. So are you, when you trade, you also do technical and fundamental or
No.
only technical?
Fundamental I don't use for trading at all.
Okay.
At all.
At all.
At all.
Okay. Yeah, because as I mentioned, I'm just started a journey. To be honest, I also, it was just not like 1, 2, 3. I just started opening the charts and learning the candles and that market structure, like either it's a level up or down. And so, yeah, so now people are also, somebody is doing fundamental, somebody is doing technical. So, but you were trying before, or you just start from the technical and you never try fundamental? Because what you can like,
this is a very big debate actually in trading, but
yeah, exactly.
Me personally, I never look at fundamental. I neither start with it, I neither do it. I just look at the chart. I see volatility, I see it moving quickly, I see opportunities in terms of levels being respected. For example, let me open just a random chart, whatever chart. This I did analysis on. Let me see what I did not do, and I did analysis on this. For example, this. What I would do is for this chart, this is very inefficient. Anyways, I don't like this chart, but what I would do, I would go here and draw some lines, look at the levels. So I see this level being respected 0.618, being respected 0.75, and it was flip to support, flip to resistance, blah blah blah. So I look at the technicals and I see the levels being well respected by this market. I say, okay, I'm gonna trade this market. If it's not just being respected, I wouldn't trade this market, because how would I know where the market would go? So that's my only criteria in choosing what market to trade in terms of technicals.
So actually you waiting that when it will come back, this has to respect. So respect meaning that it will come to that level, right?
It will react to that level, yeah.
It will react to that level. Yeah. Okay, I got it. Yeah, I just want to know that. Thank you very much.
You're welcome, sure. Any other questions?
I'm all good, honestly.
Everything is perfect. You're the questions guy, man.
Everything is really clear, honestly.
Okay, that'll be perfect.